Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Travel International Investment Hong Kong Limited Annual Report. China Travel International Investment Hong Kong Limited offers a diverse range of services to cater to the needs of travelers and tourists. At its core, the company provides travel and tourism services through various segments. The tourist attraction segment operates theme parks, scenic spots, cable car systems, skiing facilities, hot spring resorts, and other resorts in mainland China. This segment also engages in arts performance and tourism property development activities. In addition to tourist attractions, the company offers travel document and related services in Hong Kong and mainland China through its travel document segment. The hotel operations segment provides hotel accommodation and food and beverage services in Hong Kong, Macau, and mainland China. For those who prefer not to drive or have their own vehicles, the passenger transportation operations segment offers cross-border transportation services between Hong Kong, Macau, and mainland China. This segment also engages in vehicle and vessel rental and charter operations. Overall, China Travel International Investment Hong Kong Limited is a comprehensive travel and tourism service provider that caters to various needs of travelers and tourists. China Travel International Investment Hong Kong Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. China Travel International Investment Hong Kong Limited trades at a lower price-to-book ratio of 0.4 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 26% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. While the company is able to service its interest expenses from operating income, the presence of recurring special charges raises concerns about underlying earnings quality. Investors should monitor whether these charges reflect ongoing operational inefficiencies. The primary drivers of revenue growth or decline can be identified from the extracted summaries. On the one hand, several factors have contributed to revenue growth. These include the Central Harbourfront Project, coastal resorts and tourism products, aerospace tourism experience in Wencheng, asset revitalization, educational tourism programs, boutique homestay projects. Artificial intelligence driving economic and social changes, China's industrial momentum shifting towards new and high-quality sectors, domestic tourism sector growing continuously, Hong Kong's economy and stock market recovering gradually, government policies attracting talent, promoting innovation, and developing emerging industries. Additionally, the company has seen an increase in total visitor numbers and revenue from tourist attractions by more than 20%, with successful production of themed events such as Hello Dolly 2025 Spring Festival Charm, and acquisition of Wan Bingsu Company. On the other hand, several factors have contributed to revenue decline. These include a decrease of 2% in consolidated revenue from continuing operations. Loss for the year was HK$172 million, with a loss from discontinued operations of HK$503 million and profit from continuing operations of HK$131 million. Profit attributable to operating activities from continuing operations decreased by 43% compared with the previous year. Furthermore, Qingdao Lake Company experienced a 2% decrease due to project renovations and marketing efforts. CTS Intelligence saw a 4% year-on-year decline, and there was a decline in property revenue carried forward at several companies. Additionally, the company faced a decline in profit from continuing operations of 43%, impairment provision made by the group, reclassification of one-off cumulative exchange differences, decline in fair value of investment properties due to market fluctuations, decrease in revenue for theme parks and natural and cultural scenic spots, and decline in tourist attraction document fees policy. Net income and profit margins. A decline in performance. The company's financial performance has taken a hit, with a significant decline in net income and profit margins. In 2025, the net income decreased by HK $495,552 from HK $360,439 to a loss of HK $172,222. This substantial drop is a cause for concern. A closer look at the profit margins reveals a downward trend. The gross profit margin declined from 36.2% in 2024 to 29.8% in 2025, while the operating profit margin decreased from 11.6% to 7.3%. Furthermore, the net profit margin plummeted from 10.1% to -9%. These declines suggest that the company's ability to generate profits has been severely impacted. The reason behind this decline is attributed to a one-off loss mentioned on page 31. This isolated incident appears to have had a profound effect on the company's financials, resulting in the significant decrease in net income and profit margins. The company's financial performance indicates a healthy trend in its ability to generate cash from its core operations. According to the provided data, the company has achieved positive operating cash flow, which is a crucial indicator of a company's financial health. On page 16 of the report, it is stated that the company's operating cash flow before working capital changes and net operating cash flow are both $240,028, indicating a significant amount of cash generated from its core operations. This positive operating cash flow suggests that the company is able to cover its expenses and generate excess cash, which can be used for various purposes such as investing in new projects or paying off debts. The fact that the net operating cash flow is also $240,028 reinforces this conclusion, further emphasizing the company's ability to generate positive cash from its core operations. This is a significant achievement for any company and indicates a strong financial foundation. The company's financial health has shown a positive trend with significant reductions in its debt levels. According to the extracted summary, the total debt decreased by 20.4%, non-current liabilities by 23.3%, and current liabilities by 19.4%. These substantial decreases indicate that the company has made considerable efforts to reduce its debt burden. However, there is a contradictory trend observed in the finance costs, net, which increased by 355.1% on page 18. This increase suggests that despite reducing its debt levels, the company may be paying more interest expenses, potentially due to higher borrowing rates or larger loan amounts. Nevertheless, the overall reduction in debt levels remains a positive indicator of the company's financial management. The performance of various regions and segments in the extracted summaries reveals a mixed picture. On the positive side, 4 regions, Ningxia, Yunnan, Guangxi, and Xinjiang, demonstrated strong performance. Among scenic spots, Shapatu Scenic Spot, Daxian Scenic Spot, and Dali's Erhai Lake stood out as top performers. In terms of segments, tourist attraction documents, travel documents, and hotel operations showed impressive results. On the other hand, passenger transportation and corporate and related operations struggled to keep pace, indicating areas that require improvement. Overall, these findings highlight key strengths and weaknesses in different regions and sectors, providing valuable insights for future development and investment strategies. Management is optimistic about the company's outlook, citing several key strategies to drive growth. The company aims to strengthen its operations in Hong Kong and Hainan, with a focus on regional layout strategy for Hainan. With the market recovery following border control reopening, management sees opportunities to capitalize on this trend. The company is also positioning itself to benefit from the northbound traveling of Hong Kong residents trend and the opening of the Shenzhen-Zhongshan link. A key goal is rapid recovery and business growth in passenger transportation operations. To achieve this, management plans to accelerate transformation and upgrading in 2026, with a focus on comprehensively enhancing quality and efficiency. Ultimately, the company's strategy is centered around pursuing high-quality and innovative development. By leveraging these initiatives, management believes the company will be well-positioned for future success. The company has made several strategic moves through acquisitions and divestitures to restructure its business operations. In terms of acquisitions, the company has acquired two key entities: Jilin Songhua Lake International Resorts Development Company Limited and CTS, Beijing, Snow Sports Development Co., Limited. These acquisitions are expected to enhance the company's presence in the tourism industry. On the other hand, the company has undergone significant divestitures to streamline its business operations. The most notable divestiture is the spin-off of its tourism property business through a distribution in specie arrangement. Additionally, the company has distributed CTG Wellness shares to its shareholders and deconsolidated the tourism property business from its consolidated financial statements. The company's financial performance is reflected in its dividend payments. In recent years, the company has demonstrated a commitment to returning value to its shareholders through dividends. Specifically, it paid out a special dividend of HK 4,875,372,000, indicating a significant distribution of profits to investors. Additionally, the company has also declared a final dividend of HK per share for the year ended 31 December 2025. This shows that the company is prioritizing shareholder returns and rewarding its investors with a portion of its earnings. That concludes the financial summary for China Travel International Investment, Hong Kong Limited. Feel free to comment below, and I will be happy to answer them when possible.